Welcome to Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Service Ambassador Real Estate Company. My name is Mark Wehner, the second team leader here at Champions Real Estate Team. Joining me today is Russ Williams with Williams Mortgage. So we jump on here every Wednesday, give you a rundown what's going on in the real estate market over the last 7 days. Kind of give you our insight, on the ground, knowledge that we have day in and day out of what's going on in the real estate market. So we'll keep you abreast of what's going on, just some of the updates, some of the market, what we're seeing, what buyers are seeing, sellers seeing, all that kind of fun stuff. Keep you up to date on current events and things like that. So quick tip today, Russ and I are going to chat about basically the difference between pre-qualification letter and a pre-approval letter. So I'll let kind of Russ take over and kind of give his rundown on what the difference is, and I'll kind of play in the part of, how sellers see it, when they're working with buyers. So I guess, Russ, what's the difference? And,
Absolutely.
they
Yeah,
get confused. Some people think they're the same. And so,
pre-qualification basically means the lender has gathered the information on an application form and may or may not have pulled credit. And they are spitballing or ballparking that you should qualify based upon what the information is you put on the application. That's different than a pre-approval. A pre-approval means the lender has gathered documentation supporting identity, supporting income, supporting that you have sufficient funds to close in reserves if required. And all that you really need at that point in time is a purchase agreement, title insurance, and an appraisal if it's needed. It's a much more thorough way to go. And the reason why it's important, whether you're a seller or a buyer, is that according to data from researchers, Redfin and others, somewhere in the range of 1 out of every 6 purchase agreements falls through. And a significant reason for that is financing. So by having a pre-approval letter, it protects the seller to make sure that they do in fact have a valid buyer. If you are a buyer, having a pre-approval letter makes you stand out against other offers that may not have a pre-approval letter. So what I always encourage buyer's agents to do is give the agent for the seller, pardon me, giving the lender a call to make sure that in fact it is a pre-approval letter. Lenders can sometimes be inconsistent in whether or not they issue pre-approval or pre-qualification, but a simple phone call to the lender should clarify that for you and make your offer stand out.
yeah. And like I said, I tell my sellers when they're like, well, they have a pre-approval, pre-qualification. I go, a lot of times, like how you said, 1 out of 6, according to the data, is I tell them, I go, the pre-approval letter is good as the papers it's written on, because it's whether or not that lender has actually verified that information. So because a lot of lenders are like, oh yeah, sure, here, tell me what you make, what's your car payments, what's your debt, credit cards, any other, debts that you may owe and things of that sort. And, oh yeah, sure. Yeah. Based on what you told me, I think you're approved for, $400,000, $500,000 or whatever that number is. And then you go and you go search for houses. They're excited. They got that golden ticket to go out there and find that house. You get that house, and then you get the final loan application. You get the purchase contract. And then that lender goes, okay, I need all your 1099s, your W-2s, your tax returns, your pay stubs, your checking accounts, the full gamut of everything. And all of a sudden, then that lender looks and goes, hands that to their underwriter. And all of a sudden the underwriter goes, well, did you verify this stuff? Because they have more stuff, more debt than what they told you. And then all of a sudden they come back to us as the agents and say, they're not qualified for the loan, or qualified for the purchase price. And then all of a sudden, your buyer's, heartbroken, your seller's upset. And so, that's why it's very important, like you said, for those agents, to do their due diligence. And those are all things that, and when I'm working with the buyer, when our coaching session, when we get together, before we even go out and look at houses, let's have a coaching session, a meeting, an education session to get an idea of what you need to do, those next steps. And that's one of the first ones is meet with a lender. And I tell them, I'm like, it doesn't matter to me which lender you work with. Obviously, Russ is a great lender, but ultimately it's your choice. But I always say, make sure they're asking the right questions, or here's the questions you need to ask that lender to make sure that they're doing, and they're not just trying to get your business and tell you what you want to hear. Hey, we're looking at houses. We really like this $500,000 house. Oh yeah, well, what do you make? Oh yeah, I think we can do that. Here's a pre-qualification letter, and then all of a sudden you get all happy and go lucky, and next thing you know, the house of cards is falling in. And so those are those things from the difference between that pre-approval, pre-qualification. I've had buyers that they go meet with the lender, and the buyer's basically been underwritten, so they've already got all their stuff to the underwriters. And the underwriters have gone, you check every box, you are good to go. All we need is a purchase contract and a property to go appraise to make sure that home is of value, for us as the investor, the bank, to give you that loan. And so sometimes when you talk to a what's your bucket, say, if I'm the seller's agent, I get a call from that lender, or I reach out to that lender and say, hey, tell me about this buyer. Are we ready to rock? And they're like, hey, we're past underwriting. We just need the house that you're selling to meet our, specifications and qualifications and stuff, and we're ready to rock. And to the seller, good. You pretty much almost eliminate that buyer's variable of, are they going to qualify for the loan? And then it's on that seller going, hey, is your house, worth what you say it's worth, or what the contract's worth, and that side of it, and VA, FHA, if it's going to pass inspections and stuff like that. But yeah, so I mean, those are the difference. I think that people don't, the general, that our general buyers, general sellers, they don't know what they don't know. And that's our job as the real estate advisor and the professionals out there to make sure you get sound advice, rather than you think you have a golden ticket and you get out there and you're like, oh my God, it's not worth it. Because I've had that happen where I've verified, I've done this, and all of a sudden they go to, the final loan application, submit all their stuff, and then it's like, well, we did, the lender didn't know that they had, let's say child support or something that they didn't know about or tell them about, and all of a sudden, that's more debt that they have, their debt to income ratio. So yeah, so that's the biggest thing, is know your difference between the pre-qual and pre-approval. So qualification is basically just kind of a word of mouth. Yes, you're approved. They aren't necessarily verifying everything. Approval is you are approved, and there's different steps to that approval. Whether that lender's verifying it or they send it to the underwriter, that may take a little bit more time. So let's say, in the fall, you're like, hey, we want to buy a house in the spring. And everyone's like, well, my pre-approval letters might not be good if I get it approved now, another 6 months, I might not be ready. Well, get that done, because then you have a good roadmap of what you need. And maybe they come back and say, hey, your credit score is a little bit lower than, what we like. You can get a better rate if you improve your credit score. And then so now you have a couple months before you're ready to buy that house. You can do some things to tweak your credit score and get, improve your situation. And so I feel like, what I typically see is, they don't want to meet with the lender until literally they go look at houses, and it's like getting the cart ahead of the horse. And so it's just, we want you to be sound buyer, because when you have 8 offers out there, an agent that's doing their due diligence on the seller side is going to verify that you have all your ducks in a row. And that, that with how there's 8 offers, a lot of those offers are very similar. And it may come down to the fact that you have a pre-qual and the other one has a pre-approval. The other one's been, fully underwritten, and you're just kind of gathering your data, and if I call the lender, oh yeah, I'm working with them. Yeah, they're getting me some more paperwork, and I'm waiting on this, and this. And it's like, okay, well, we don't have time to wait. Maybe my seller's got a house they got to close on, so they may go with a different offer. So that's what we try to do, is put you in the best situation, because these are things we deal with every day. We see hiccups in the road over 17 years that I've been in. I know Russ been in it longer than I have. We see those things, and we can read the defense on the other side of the field of how are we going to, combat this, or what play are we going to run out of our playbook to give you the best situation, both from a seller side and the buyer side. So anyways, that was kind of a long, quick tip. So anyways, but yeah, let's jump in. What's going on in the real estate market? Do you have anything else you wanted to add, Russ?
Oops, nope. I think that's good. It's very important. And if you're serious about buying the house, you want to make sure that you look as good to the seller as possible. And that's the one way to do it.
Yeah, and you want to show that seller you're serious. And the way to do that is, hey, I got a pre-approval. I'm underwritten. I'm ready to rock. Like, I'm not messing around. I'm not, hoping, one hand, wishing the other that I get the house, right? So, all that fun. So, we got a little activity going on the market here. So, last 7 days we had 660 new listings go live in the last 7 days, which last week we were right at that same, we were at 616. So we're seeing more houses come on the market. Obviously, it's May. It's gonna be May anyways, but yeah, so, we're getting the the market picking up, which is typical this time of year. We had 523 new contracts written, so up a little bit. So more buyers are out there in the buyer pool. And then we had, obviously, from 30 days ago, we had 533 sold houses. So congratulations to them. And then we had, last week was only 370 some, so we saw, that's what we're seeing is now the market's picked up in the last 30 days, so if you're waiting for rates to get better, the other buyers are jumping in the buyer pool, and that could potentially raise that cost up a little bit. So like I said, we're still seeing some good activity out there from both a buyer and a seller position. But indicative, when we're working with a buyer and a seller, we're going to look exactly what market you're looking in, what area, town, what price point, what neighborhood. And so we can dial it in, as best as we can for you, whether you're selling to maximize your equity or to, on the buyer side, to get you to compete in the competition out there, and earn a seat at the table with that seller. So Yep, that's kind of the rundown on that side of it. 30,000 foot view. I just like showing this just because this is what, I feel the traditional media out there, some agents talk about a lot. Oh, we got 3,145 houses on the market, 1,818 in Douglas County, 913. So it's the first time we've had existing houses above the new construction for a while. So basically what that means, obviously new construction, the houses that were put in the ground, in that November timeframe, they're at spec phase, they're selling, they're not putting more in the ground right now. They're building more more custom builds essentially right now, that are kind of the prepaids, I guess, if you want to call it that. But, yeah, and we got 2.5 months supply of inventory, down a little bit. So like I said, is even though we're having more houses come on the market, we have more buyers coming in the market. So that's driving our months of inventory down. So, and our average sold price went up $2,000 from last week to 344. So like I said, we're having a great turnaround here in the market. Obviously, I see it's being fairly active, at least on our team. We're seeing buyers out there, right? Seeing sellers, reaching out, and all that kind of fun stuff. So I guess let's jump in. I know we talked a little about financing before, but let's see what's going on our mortgage side of the update on what's going on. So how are we doing, Russ?
Doing pretty well. Every 6 weeks, the Federal Reserve Bank meets in their open market committee meetings for 2 days, and today ended up being the second day of their current meeting. And as expected, they kept the Fed funds rate unchanged. In their statement, they said there was a further increase in uncertainty that the risk could be higher for inflation and unemployment, and that creates a real issue for the Federal Reserve. Historically, and at least recent history, the Fed has said they want to focus more on unemployment because they see inflation in this tariff trade war environment as being perhaps a little more transitory. So we'll be watching closely to see not only what the Fed says in their press conference here in the next hour or so, but also what the Fed governors say as they make their rounds over the next 6 weeks before the next meetings. Having said that, though, mortgage rates are improved just a little bit from where they were last week. And to Mark's point, with inventory uh, being swallowed up pretty quickly by demand out there, again, we can't say this enough. If you want to buy a house, certainly buy it at today's prices because as demand increases, that starts to put pressure upwards on home prices. But mortgage rates generally are going to be somewhere in the sixes for your good credit and reasonable down payment. And there is still first-time home buyer subsidy money out there. So if you want to jump in and buy your first home, this is a great time to reach out to a market team.
Yeah, and even for real estate investors. So that's another thing, that now's the time as well. Obviously, different segments of the market is also a good time to get in that real estate investing side of it. So buying it, holding it for long term, that's obviously a good play out there for some of that, for that appreciation, and obviously tax benefits and all the different ways that you can capitalize with a real estate investment. So if you have questions about that, reach out to me. Happy to help you. All that kind of fun stuff. So appreciate everybody listening. If you, like I said, questions, comments, like, subscribe, all that good stuff. Happy to help anybody. And awesome. We will see everybody next week, and take care and have a happy Mother's Day to all those mothers out there. So we'll see you Monday, Mother's Day, and happy birthday to my wife. So I got my wife this year. Pretty awesome. The roof is getting put on tomorrow on her birthday. And I asked the roofer, I'm like, hey, can you put a big old bow on top? And he's like, oh, maybe. So it's kind of fun. Anyways, so funny, haha. So she might not be too happy or funny about it, but I think it's kind of silly.
It beats a vacuum, Mark.
Yeah, right. Get a brand new roof. It's like a,